Good morning, everyone, and welcome to another edition of Bleeding Crypto's market update. Today is Wednesday, October 2nd, 7:05 a.m. local time. I hope you're having a good day, morning, or afternoon, depending on where you are in the world. Let me start off by giving my disclaimer. I am not a financial advisor, and this is not financial advice. This is just for entertainment purposes only. So please make sure that you use this only for your fantasy paper trading, and that is it. All right, guys. So lots to unpack today, so I want to go ahead and just jump in it because I have to take off. I'm going to take my grandkids to the petting zoo, so I'm going to give you this a rundown as quickly as possible. You may not even need to adjust the speed today to 1.5x because I'm going to talk so fast. We got our higher low, so we were expecting a higher low. But first of all, I want to talk about a lot of negativity that I got on Twitter, okay? And you saw that negativity as we're coming up here. You look at the comments, right? Well, what were people telling me? Oh, BC, you got to let this go. You got to let go of a drop. The drop's not coming. It's Valhalla. And I kept saying, okay, guys, we have to invalidate it. We're doing good. We have the good market structure. We're doing great. But this is a proven data. I said many times, you have zero data that says we're going to go higher. I have 6 months of proven data that that this is going to be an area of resistance, and we've dropped every single time that we hit this. As a matter of fact, I encourage you to call me out. Go back to September 17th, 18th, 19th, 20th, every single one of these videos, and see what I said about this area here. Oh, BC, you're just too much of a bear. You gotta let it go. What happened? I gave the bulls every chance. I say, this is it. I'm with the bulls. Let's go, bulls. Well, what happened? You know what happened here? 6 months of proven data happened. Let me tell you something. The market doesn't give a shit what you think, what you want, what you feel. It only gives a shit about one thing. It's fucking data. The data is the only thing you should worry about. And the data, once again, proved to be 100% correct. All right. Well, that being said, this drop happened. This drop was necessary. I am still not bearish. I am still holding a bull bias. A temporary bull bias. Okay, so I talk about not having a bull or bear bias, and that's in the grander scheme of things. You have to have a bear and bull bias when you're building a market structure, and let me explain to you what I mean. In order for us to get into a higher low, you have to have a bear bias. You have to be okay. We have to dump out to put the right market structure to get us to the next level higher. And then when that happens, you turn into a bull. Okay, that's what I needed. Come on, bulls. When we get here, what do we need? We need you to drop. Come on, bears, bring it down. All right, great. Thank you, bears. I appreciate it. You put another higher low. We know that we know what that's going to cause. It's going to cause a push to the upside. There we go. We knew the bears would come through for us here. We knew that this would drop. 6 months of data. You can't argue with 6 months of data. Please drop. Get us that higher low. That's exactly what we did. We came down and we got a higher low. However, there's two ways of measuring a higher low. One that I talk about very often, the continuation rule, because that usually gives us a spring action, and it doesn't always play out with the spring action. Look at down here. We had 16 hours of consolidation on this previous higher low before we had this move. Now, the fact that we invalidated here and now we are forced to put the consolidation rule really is not that much of a surprise. You know why? Because look at the length of this move. This was an overextended move. So yeah, we're not going to follow the shorter time frame higher low. We all wanted to, but we didn't really do any big damage. We still came in right into, look, I want you to see this, guys. You have to see this. Right into 706. Do you understand why I have this marker on my fib? It's an extremely accurate fib. 706, 619, 786 are there for a reason, and that's what we did. Another thing we did, we talked about the channels that I have. I have two channels. I have a horizontal channel. This is the bottom, this is the medium, and this is the top. I'm going to take this off of here, clean up my chart a little bit. And then we have the diagonal channel. The diagonal channel has more merit because the bull flag that we are in on the monthly time frame is a downward sloping bull flag. There's two different types of bull flag. One is a sideways consolidation bull flag, and the other one is a slightly downward consolidation before that breakout, and this one happens to be a downward, so this is why this one's more accurate. However, I talked about this in previous videos. The horizontal has 2 points versus the 3 points that the diagonal has as a very strong areas of support and resistance, that being the medium and not being the bottom. Now you tell me, look at the absolute beauty. I'm going to remove this fib so that it doesn't crowd our charts. I just want to make a point that we haven't invalidated anything. We're still within the consolidation rule that can easily last 12, 16, 24, 32 hours. But the point is that we don't want to lose this. We lose this, and we'll talk about that in the a little later on the reverse perspective. I always have to give you two perspectives. So I'm just going to raise this up just a little bit, just because I want you to see this. I want to go to the hourly, and I want you to see the respect. I don't want you to say, oh, BC, it's a coincidence. No, it's not a coincidence because we talk about it. It happens every single time. So it happens again. It's not a coincidence. Look at the respect. Okay, why does this matter? Why am I so focused on this respect and how well it holds? You know why? Because it's things like this that give me the confidence to step into risk. Every time you take a trade is not a sure thing, no matter how good it looks. You're stepping in front of risk. But you want to step into as minimal risk as possible and increase that probability as much as possible. So when you have anchors that you can trust with a high certainty like this and like this, it's a game changer. It is a game changer because it'll allow you to see things that most people won't see here. You know how many people had a block because they wouldn't shut the fuck up saying, oh, you're just such a bear, it'll never drop. Really? You know those people that I blocked are looking at this like, oh, fuck. I wonder what he's saying now. I wonder what he's saying. I wonder how far his prediction's going to go. You know they're doing that. I don't control this, guys. I don't control it at all. I'm just smart enough and lucky enough. Well, not lucky. I put a lot of work into it. But I'm fortunate enough to have found a good system. Is my system the only system that's good? No, there's a lot of great traders out there. And I'm always telling you that. Follow them if you don't relate to me. That's okay. But find a system that works, that has a good probability, that has a good track record, so that you can understand how to handle these and what these mean. Now, does this mean it's automatically we're going to go higher? Absolutely not. Because on the way down, we broke through some areas of support, and that's natural. We're going to break them, but now we have to regain them. So one of the videos that I talked about, if you've been following my series, I told you guys that we broke through the 50 EMA on the daily time frame, and we back tested. But what we didn't do is that we blew through the 100 EMA, this gold line, and 99% of the time the price action will come down and back test. Back test closed. Back test closed. And if you don't believe me, go left on your own time and spend the entire day looking left and tell me when we left an area that we did not back test, or an EMA that we didn't back test. I challenge you. That'll be a good assignment. So moving forward, just because we landed here, just because we respected the consolidation rule, doesn't mean that we're out of the woods. Because what we have to do now, we have to climb above the 50 EMA. We have to regain that back at support. The 100 EMA, we got to regain that at support. Then we've got the very important 200 simple moving average to get back in here. To start really gaining that full control that the bulls had on this move here. They don't have the full control. Not yet. Nothing's confirmed. So that's what we need to see. Climb here, a climb there, and a climb there. And then we'll talk about the next plan to the upside. Because there's still other things that I'm gonna make you aware of, but I don't want to talk about them now because I don't want to get ahead of myself. That's assuming that I know what's going to happen. I don't know what's going to happen. I have to allow the charts to prove it to me. Once it proves it to me, there's a whole set of things that you're going to need to be careful about. And guess what? I bet now people are going to listen. After they see the accuracy of this, now they're going to shut the fuck up, and now they're going to listen. But unfortunately, the ones that got kicked out don't have that chance unless they went and opened another account and go through all that hassle, which I don't think I'm that important enough to do that. But, you never know. You never know if people are willing to do that. If they are, great. Now, I bet they're going to refrain from commenting, but there's going to be a whole new level of challenges in here that I'll talk about that when we get here. Now, let's talk about the alternative thesis that if we don't continue to respect this and we cannot climb above this, what dangers are we in? Well, guess what, guys? Remember I told you that I had 5 markers down below that had a 90% probability, and I canceled them out based on the fact that we were running out of time because of these seasonality charts, and we were where we were. We put in the work, but guess what? We now did something that we weren't expecting to do, and that weakened that type of resolve was that we did not bounce off the continuation rule, but we did respect the consolidation rule. So with that in mind, I have to now say, okay, well, you weren't as bullish as I thought you were because you didn't hold the continuation rule. You're still holding key areas, but now I have to have a different plan. Now I have to have an alternate plan because you show me some kink in your armor. There's a small kink in your armor that is giving me that I want to step in front of before it's too late. And I want to have a plan before it actually happens. Then I'm scrambling to find out what am I going to do? No, I want to do it ahead of time, so that it's a calculated plan. So all I have to do is execute. Put the work in now. All you have to do is just push the buttons and execute. Well, what's that plan? Here it is. I'm gonna take this off of here. I don't need it anymore. All right. We all know we respected that, because here's a crucial part. This purple line, guys, whether you want to believe me or not, whether you want to call me a bear, I don't care, because you know what will happen. I will block you. If we break below here, guys, it's over. It's done. And I'm going to show you why it's done. This is the do or die line for Bitcoin. Okay? This is a do or die line. If we break below here and we reject this one, we will back test it. When we back test it here and it can't break above it, it cannot regain, and it starts rejecting, all my markers are back on the table. And seasonality, though the odds are for the bulls, excuse me. Well, look at this here. 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 There were still some red months. There's more green than red, but we can easily turn into one of these months. Okay? Nothing says that it cannot happen. And if the chart is proving it to us that it may turn into one of those months, then so be it. Then so be it. We have to be prepared for it. So let me show you what that looks like. Why this purple line, people are asking. And with rightfully so. It's because of this. If you go, let me take off the indicators. Hide indicators. If you look and follow this line here, and you look at the underneath, look at the amount of resistance, 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 resistance. You can go all the way back 6 months, and you see massive amount of resistance, more than you see support, more than you see support. So that tells me that this line has one of the hardest, longest standing areas of resistance that I have seen in a long time. I can't remember the last time in years that I saw something this strong as resistance, which implies that if you come down, you should hold that really, really well, because the stronger the resistance is, the stronger the support it should be. And so if we break below it, then it shows me how weak and how strong the bears truly are, how weak the bulls truly are in this area, and how strong the bears are in this area. And the chances of breaking below here is going to be very, very minimal that we're going to break back up because of all the data, the same data that I told you that we would reject from here or here, and it played out. That same exact data is the same exact data here, just at a different price point. So if that happens, guys, we're now looking at my $51,500 target with a possible sweep of 49,000, which means that we'll go into the high 48,000s, 48,700, 48,800 for that possible sweep. And here's what's funny, guys. I'm going to be blocking so many people from this comment that I just made because I said possible. This is the fourth time that I say possible. That's the fifth time I say possible. And they're going to tell me when it hits 51.50, why did it go down to 49? Or if it doesn't, it bounces. You said it was going to go to 49. It only went to 51. What gives, BC? What happened, BC? That's the ignorance that I have to deal with. But again, those are the people that I said that we're gonna wipe them out at the top of the market because we're gonna be able to dump all our back to them and we're gonna convince them to buy. So we need them. We need them. Yeah. So this is it, guys, right here. If the bulls cannot regain control, then $51,500 is back on the table. And there's other levels that I'm looking at. There's other liquidity markers that I have that I don't share with you guys. Those are from my Discord group, but I will share them as we're getting closer to them. I will then share them because at that point we're going to be going down and we're going to be hitting them. And I'll let you know some of the points where we're going to pause. We're going to pause as we hit them. We're going to be pausing in certain areas to grab that liquidity, or we may see some opportunity for some scalp bounces, which I'll be playing very adamantly because I love scalp bounces. Scalp bounces to the up and down are one of the best money makers because you get to just continue to look at the data and really have that confidence to step in front of risk when you have the right data. Now, keep in mind that at the moment, there's another set of data that I'm looking at. If you look at the DCT heat maps and the high block heat maps of contracts, they're favoring an upside move because of the $20 billion in shorts. Remember when we had $20 billion in longs? That's when I was hoping if we're going to come down, we come down there, but they will wipe them out already and it flipped it into short positions. So that data is what I hope will get us above the 50, but it's not guaranteed because though 20 sounds like a lot, I've seen it go to 42, 35, and 42, which means a breakdown into here. That'll give us that 40 billion in accumulative short contracts. So keep that in mind. That is don't say, oh, 23, I'm going to long the hell out of it. Okay, you can, but that's not a guarantee. That's not a guarantee. Those contract data that I look at are very accurate, super incredibly accurate for scalping. They're great. They're great for that. I have a copy trade system that I use now for my members on my $25 a month channel. So I give them the where to buy, where to sell. But on top of that, if they don't have time to go in front of the computer, they can just sign up to my link. And it doesn't cost them anything. They already paid them $25, so it's included in the $25. And they just fund the account, and whatever I buy, their account automatically buys. Whenever I sell, their account automatically sells. So if you think that I have a pretty good accuracy in reading these markets and knowing what to expect and what to look for, give me a try. Give me a try and see what you think. It's worth the $25. It's worth a lot more than $25. But again, you just have to make sure that you could relate to me. If you can't relate to me, then there's no point. Then there is really no point at all. But look at the trouble they're already having. See, we're getting rejected from the underside. We're trying to break above the 50 EMA, and it won't. It just shows, again, these are kinks in the armor. These are kinks showing you that, yeah, the bull was great here, but the bull's not stepping up to where it needs to step up. Do I need to start paying attention? And believe you me, the moment we break below here and we hold and we start breaking down, because this happened already, but we recovered quickly. So let me show you what I mean by that. You see these? We broke this. This was a candle. We wicked back up. It is the hourly time frame. So before the hourly candle finished, it was able to regain it. Same here. Broke below it, gained it. And end of the candle happened. So when you start seeing full candles here, that's a warning sign. You better be prepared that if we lose this, we're going down. It's an early warning system right here. Early warning system. Very, very rarely you get those early warning systems. You got one right now. So you better be paying attention to it. Look at all the rejections. We cannot reclaim the 50 EMA. Look at that. We cannot reclaim it. We put in a bearish market structure, double top. We came down, we completed that double top. We came back up. We try to break it right now, and look, we're back down again. There's a big fight going on between the bears and the bulls that you're not aware of. You better make sure you're on the right side of that trade, or it's going to be really, really ugly. All right, guys, that's all for today. 20 minutes? All right, good. 20 minutes. So you guys know what to look for. You guys know what we need to do. You know what not what we need to do. You know what the bulls need to do. The bulls need to prove themselves. The bulls need to show us that they are in control, that this is going to be a green October. Because if we fall below here, it is a red October. It is going to be one of these months here. 1, 2, 3, 4. One of these 5 months that happened in the past compared to 1, 2, 3, 4, 5, 6, 7, 8, 9 that were green. We're going to have that. All right, guys, I have to go because I got my family just showed up. My kids just showed up. Talk to you guys later.